Hello, you're watching the business headlines on HW News with me, Ali Azhar. If one were to draw a parallel between the BJP's political and economic strategy, it would be something like this. Politically, the BJP has made some very smart moves. When it comes to feeling the pulse of the common man, which is their vote bank, they've got it bang on. By backing controversial politicians such as Yogi Adityanath and Pragya Thakur, they played a dangerous game, which could have backfired, but it didn't. And you have to give them points on that. I mean, sitting in your C-suite in Mumbai or Delhi, you probably look down on the ideology of such candidates. But in the heart of Uttar Pradesh and Madhya Pradesh, things are very different. And people have related to them, and hence they have been accepted. So, even if you and I don't agree with them, kudos to the BJP on that front. Economically, it's a whole different ballgame. The party just does not seem to be displaying the same acumen financially as they are politically. Its economic policies have failed miserably, and it's showing. GDP growth, investments, gross tax collections, industrial production, auto sales, exports, all are at multi-year lows. Consumption, demand, and business sentiment in the country could not be worse. Also, tax terrorism is on the rise. The recent example of coffee baron VG Siddhartha brought to light these disturbing realities which our businessmen face, which until now were conveniently swept under the carpet. We sometimes wonder, is the government willing to listen to its economic advisors? The recent unceremonious exit of Subhash Chandra Garg from the post of Finance Secretary seems to suggest that he was made a scapegoat for the failed economic progress of the NDA regime. Keeping in tune with this theme, the recent budget presented by Finance Minister Nirmala Sitharaman last month in July was no exception. At a crucial time for the country and having come to power with such a strong mandate, the FM was expected to come out with some tough policy decisions and offer stimulus to revive a sagging growth. However, that didn't happen. A slew of measures were ushered in which spooked the market no end. Foreign capital in the form of foreign institutional investors or FIIs and foreign portfolio investors or FPIs took flight from the country, and the stock market saw one of its steepest falls in recent memory. A recent report by Bloomberg released a week ago claimed that $200 billion was wiped out in market cap up until then since the budget. A list of few measures announced by the FM which were widely viewed as unfavorable or detrimental by market participants were increase in minimum public shareholding from 25% to 35% for listed companies, a proposal to tax buyback on shares at 20%, and the most important and contentious of the lot, increase in surcharge on individuals and trusts earning in excess of 2 crore rupees. With this amendment, the highest tax slab of 42.74% became applicable to those individuals and trusts earning in excess of 5 crore rupees. FPIs, which are the primary source of foreign capital coming into the stock market, are mostly structured in the form of trusts. Therefore, in effect, what this new provision did was increase the tax on foreign investment. There was a massive hue and cry from many trade bodies and representatives of such FPIs. The government, however, stuck to their guns and insisted that they would not reconsider their stance going forward, and put the message out that if FPIs want to avoid paying higher tax, they should consider changing their status from that of a trust to a company format. It was then that FPIs and HNIs, which are high net worth individuals, began pulling their money out of the Indian stock markets and parking it elsewhere where tax laws were more accommodating. The Indian equity market strategist at Morgan Stanley, Ridham Desai, made a very interesting comment on another news channel. He said that policymakers do not pay much heed to stock markets and don't consider them an important economic indicator. They view them more like gambling dens. Now, if this is actually true, it would indeed be very disheartening, as The hard-earned money of millions of people are at stake. But moving on. After all the havoc wreaked by the stock market and worsening general economic conditions, the government finally seems to be waking up to this harsh reality. A government panel led by the finance minister has been meeting up with various industry leaders and trade bodies to hear out their concerns and making an effort to address them. The FM met bankers on Monday, representatives of MSMEs on Tuesday, automobile and component manufacturers on Wednesday, industry bodies on Thursday. She will meet representatives of the stock market, overseas investors and FPIs today, followed by home buyers and real estate developers on Sunday. It is precisely on the back of this news that after initially rejecting pleas from FPIs to roll back the increase in tax, the government has now decided to take stock of the situation, that stock markets have surged in yesterday's and today's trade. In Thursday's trade, the Sensex and Nifty spiked 1.74% and 1.63% respectively, registering its biggest gain in nearly 3 months. Today was slightly more subdued, but considering the general scheme of things, we'll take it. The Sensex was up 0.68%, while the Nifty ended the day a 0.7% higher. The FM will be meeting market participants including senior officials of foreign portfolio investors and mutual funds to ascertain their views on financial markets. The market is abuzz with chatter that the government may exempt FPIs from increase in taxes altogether. And further, there's also news doing the rounds that long-term capital gains of 10% on equity shares, which was introduced by the budget in 2018, would be done away with if the holding period is beyond 3 years. However, these reports are still unconfirmed. But if this is indeed the case, one can expect a sharp bounce back in the markets and a return of trust and confidence to some extent among investors, domestic and foreign alike. While such proactive steps in the right direction have been taken by the government only after insurmountable pressure from all directions, and one can say that it may have been a little late, but nonetheless, it comes as a relief. And one could say that this U-turn by the centre is maybe the first steps they are taking towards admitting that they have been wrong when it comes to implementing economic policies and are working on improving the situation. Thank you for watching HW News. This is me signing off. Have a great day.
Namaskar. HW News Network today is a year and a half old. Thanks to your support, thanks to your love, we've grown. We require your support a little more. What we request you to do is to download our free app. Our app is in English, Hindi and Marathi. We promise to update you with the latest news, views, analysis, interview. We also have a live TV going in that. If you download our app, we will get advertisers. And if we get advertisers, we'll get revenue. We get revenue, we can serve you better. So once again, please do support us. Please download our app. Namaskar.
नमस्कार, आप लगातार सुनिए सरकार देखते रहें HW न्यूज नेटवर्क पर। और अब अपने एंड्रॉइड फोन या अपने आईफोन पर डाउनलोड कीजिए मुफ्त में HW न्यूज का नया ऐप। जी हां, आप अपने सुविधानुसार कभी भी खबरें देख सकते हैं, मुझसे जुड़ सकते हैं। तो इंतजार किस बात का है दोस्तों? डाउनलोड कीजिए HW न्यूज का नया ऐप अपने एंड्रॉइड फोन्स और आईफोन पर।
HW न्यूज पर आप मुझे लगातार देखते आ रहे हैं द विनोद दुआ शो में। अब आप मुझे एंड्रॉयड और आईफोन पर भी देख सकते हैं HW न्यूज का फ्री ऐप डाउनलोड करके। तो देर मत कीजिए, डाउनलोड कीजिए HW न्यूज का फ्री ऐप और मुझसे जुड़े रहिए।